Okay. Today we'll try to learn about profit and loss statements, the official kind, not the kind that I hastily explained in the previous videos. Uh, but first, we need to learn asset classifications. We got current assets and non-current assets. Current assets are expected to benefit or change within a year. Like cash, you will probably use it somewhere. Inventory, it's supposed to be used within a few months. Advances, it's something that's, might change in the next month. Non-current assets, expected benefit over a year. It's basically things like buildings, motor vehicles, things that will last. And then there's tangible assets, things that have, physical substance that actually physically exists, like inventory, motor vehicles, buildings. And then there's non-tangible assets, doesn't have a physical substance. Basically things like, trademarks, patents, and stuff. And besides that, we got liabilities classifications. There's current liabilities and non-current liabilities. It's pretty much the same as, current assets. No, wait. Current assets and non-current assets. It's supposed to be due in a year. It's supposed to be due in over a year. Current liabilities are simple, like credit card bills. You probably have to pay them within the next month at the latest. But I don't know why you are not paying them. And then there's long-term loans, non-current liabilities, things that last a year, maybe like house prepayments. I don't know. And there's also operating like operating profits, operating revenue, and operating expenses. Also, other operating expenses. There's no other operating revenue, so only think of it as operating expense. So, for operating revenue, think things like sales, things you get profit from in your business. Maybe if you like sell pencils or school supply, if you sell your entire inventory and get a profit, that will be your operating profit or revenue. And other operating revenue will be things like maybe you put your excess money in a bank account and you got interest, then that will count towards your operating revenue. Other operating, no, there's also operating expenses, which is basically the opposite. You know, stuff you stuff you spend in your regular business, I guess, like rents, utilities, etc. And then there's other operating expenses. They're basically things that you spend money on outside of your business. And those can be like, let's say you got an old building, you want to sell it, but you get less than you originally paid for. I don't know, have you managed to accomplish that? But congratulations, you lost
Mhm.
money somehow.
Mhm.
Oh, also, fun fact,
Mhm.
non non-operating expenses
Mhm.
include interest and tax, things that are off your control, I guess.
Mhm.
Also, another fun fact, I forgot to say this in the previous video, but things like pens, for example, don't count towards assets. They count towards, expenses because they're so expendable. They're so short term. Basically, current assets, like maybe medicines. You don't expect to, use them. You might have bought candy for your office. It's not gonna be an asset. It's gonna be an expense. Don't count it towards an asset. Don't try to keep track of it. Count it as lost already.
Expense. Yeah.
Yeah.
Mhm.
So finally, let's get to the profit and loss statements. First, write down your due date. It doesn't matter as long as it's accurate. It's yeah. You can't forget your date. Okay, it's pretty important. It's the only thing that'll ensure that everything's correct. I guess. Otherwise, you'll lose what date you purchased something.
Mhm.
Anyway, operating account. divided into trading account and other operating. First, trading account. Take your sales, subtract your cost of sales to get your gross profit. Why is it called gross profit? Because it's gross. Like, it only shows you how much money you got, which is not accurate, by the way. It doesn't take into account things like your salaries, utilities, every other expense. So it's basically an inflated number. Don't get your hopes too high. It'll only disappoint you later.
Mm-hmm.
Then there's operating expenses. To get your operating profit, grab your gross profit, divide no, and to subtract your operating expenses to get your operating profit. Finally, from your operating profit, subtract things like interest and tax to get your net profit. Congratulations, you learned the basics of profit and loss statements. Just call it PL statements for easier
Mm-hmm.
sayings, I guess.
Mm-hmm. Thank
Yeah,
you.
that's pretty much it.
So in the first part, you just explained what the balance sheet is and what are the what it has it consists of, right? Assets,
Yeah,
liabilities, and then lastly you mentioned what the PL statement is. Yeah.
yeah.
Yeah. Thank you. Yeah. So this is so far what we've learned, and tomorrow we will carry on from the another section.
Yeah.
Thank you,
See you
Baira.
tomorrow.
Thank you,
Thank
Baira.
you.
See you.
Yeah,
Bye.
bye.